Hello, everybody. Welcome to this week's edition of Northwest Quadrant Wealth Management e-News. Thank you for joining us. So the stock market has now made a round trip since the beginning of the war in Iran. The sell-off we saw at the beginning of the war in Iran. The stock market is now back at all-time highs. And there are a lot of you that are sort of confused by that. Why, with all the bad news that you're seeing on television and all the doom and gloom that people are forecasting out into the future, you think to yourself, well, why are stock prices at all-time highs? And there's a couple of reasons. One, and most importantly, is we aren't seeing any demand destruction here in the United States. If you go to an airport and anywhere in the U.S., it's full. Airplanes are full. The shopping malls are full. So demand destruction hasn't happened here. The amount of money Americans are spending on filling up their cars is the lowest percentage it's ever been as a percentage of their overall budget. And so that matters too. It's not fun to fill up our tanks right now. But really markets are looking past that. And then Josh can elaborate on earnings, but I'll just say that earnings are ultimately what drive stock prices, and earnings are really good. And so all the factors, you take Iran out of the equation, the U.S. economy is doing quite well. Now, I guess the big question mark out there, and markets right now are forecasting this a resolution relatively soon with the situation in Iran, because obviously if the Strait of Hormuz stays closed for a long time, it will affect prices out into the future, and that could affect demand. But as of now, markets are pricing in that we are going to get some resolution as it relates to the Strait of Hormuz, and then we won't see any demand destruction, and earnings can continue to grow, and stock prices don't look expensive. Because I know a lot of you are very confused as to why stock prices are doing as well as they are, and it really comes down to those factors. Now, if you're in Europe or in Asia, it's a different story, but thankfully we're here in the United States, and it really hasn't affected demand. And ultimately, like I said, earnings are the ultimate driver of stock prices long term, and Josh can elaborate on those.
Well, at peak fear in the Ides of March, we were looking ahead to earnings season as potentially representing some salvation for stock prices, and we've certainly found it. We have double-digit earnings growth, north of 15%. On Wednesday, 4 of the most important names in the index reported. Of course, that's Google in the form of Alphabet, Amazon, Meta, and Microsoft. They demonstrated 60% earnings growth year on year. CapEx, capital expenditure for the upcoming year, was revised another 75% higher over the astronomical figures that are already being deployed, which is kind of, I think, explaining some of the market movements we're seeing later during the week, which is this broadening out of performance across the indices. We're being led to the upside here by small and mid caps, and you can see the real world manifestations of that, and it harkens back to the tech telecom media bubble of the early 2000s when internet infrastructure was being created. It resulted in the creation of the physical deployment of assets, and you're seeing it in the performance of stock prices like Caterpillar. There is an enormous demand for physical, real-world industrial infrastructure and spending, and that's being borne out by the AI earnings growth. But the earnings growth overall, north of 15%, revenues in the double-digit growth. This is 6 straight quarters of double-digit earnings growth. Corporate profit margins are at all-time highs. If you're a believer that AI lets more people or fewer people do more with less, it bodes very positively for future earnings. We're starting to see a little of that unbridled speculation in markets that you can kind of see during these types of quarters where sentiment sort of reaches a crescendo, and maybe that's true in certain names. But overall, we think markets are going to go back to this environment where AI-related research reports destroy specific industries as the market continues to try to discern who are going to be the ultimate winners. But for right now, earnings growth is extraordinarily powerful, and it's driving upside in stocks.
So a lot of you need to remember the model of media businesses, right? So however you get your news, whether it be on the television, on the internet, remember they're all competing for eyeballs, and the more sensational they can make the news, the more eyeballs they get. That means they make more money. And so remember that when you're watching the news. The news isn't the news anymore giving you information. It is sensationalized. And so what you need to do instead is to look at what's actually happening. And here in the United States, again, we're not seeing any demand erosion, and earnings are growing at record pace. And ultimately, that's what makes for good stock prices. So as always, if you have questions about your situation or your account, give us a call here at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We will see you back here in a couple weeks.